So we're missing Mike today. He's at Value X and he's caught up in meetings.
Well, this will be the first time Hunt and Jason have been allowed to do the podcast by ourselves.
Yeah, without supervision.
Without supervision.
Welcome to Telltales. I'm Mike Nicoletti. Every week, along with my co-hosts Jason Wallace and Hunt Lawrence, we bring you the cash flow memo. Get it at telltales.us. For the next 30 minutes, we're going to dive deep into energy, technology, and healthcare. So download the memo now and get started.
The following conversation is intended for informational purposes only. You should always do your own work to determine if an investment is suitable for you.
We've had lots of news to cover. I would say the oil news, Trump's a master at creating news. I'd say the oil news on Exhibit C is he's promising to take Iranian exports to zero. That would mean that production from Iran, 25, would go to whatever they use internally, which would be around 1.5 million barrels. I think by using the sanctions that Biden had in place, Biden administration had in place on Russia, actually executing them, I think the Russian production will come down. I have it here coming down 500,000 barrels, but I think that will be more like 1 million barrels. Relates to the ships the Russian exports go in, which are out of class. And you see both India and China ports turning those ships away, both ships with Iranian crude and Russian crude. So this surplus capacity of 4 million barrels or over 4 million barrels last year, and, 2.5 to 3 million barrels this year is, if those conditions prevail, surplus capacity will go away and oil's more likely to fold in the 70s. As far as gas goes, weather through the end of January was terrific for natural gas. And pricing still seems to be pretty good. If you look at the bottom of Exhibit B, hanging in there at $4 for 26 and $3.65 or so for 25. One worrisome thing is that production, which is estimated at 105 this year, is actually already at 105. So there could be some additional production. There's all this publicity about data centers needing more power, being limited by power. If you look at the power line, it's been up 1.5 Bs a day per year since 21. I think that will continue. I don't think that will accelerate. As far as LNG goes, good news there after a flat year last year. Stage 3 Corpus Christi and the cargoes at Plaquemine Parish, Venture Global's second project, Louisiana, are taking feed gas up to that 14.5 range already. So all that's good. As far as macro goes, Elon Musk and his Doge team seem to be really having an impact. I think that as the year goes on, that 2025 forecast of $7 trillion of spending will come down. Now, $1 trillion of it is interest on the debt. That is going to stay the same. Defense spending, just under $1 trillion, I think will stay the same. So the savings are in all other, which is $1.3 trillion, and I think in Medicaid, which the federal contribution to Medicaid is $600 billion. I think the way they're going at it, those are payments made by the federal government to support state Medicaid programs. I think that they're likely to take a significant chunk out of that $600 billion, give you $200 billion. I think on the all other category, they'll take another $200 billion. I mean, USAID program, which most of us didn't know anything about, apparently spent $40 billion a year, and they've shuttered the doors, dismissed the employees. So there'll certainly be court challenges and lots of Democrat complaints and maybe bipartisan complaints. But it seems to me they're off to a good start. Anything to add there, Jason?
Yeah, it seems like a large-scale continuation of what he did with the continuing resolution by finding all the pork spending and just highlighting it and bringing it to the forefront and saying we shouldn't be spending this, for whatever absurd program we're doing. For the Medicare and Medicaid line, the government reports that they assess that they lose $100 billion to fraudulent claims every year. So I think, we're seeing Elon apply some of these. He has a team of data scientists and AI tools to look line by line at where all the money's flowing to, where all the spending is. So I'm sure we can put in a much more sophisticated, modern anti-fraud system into Medicare and Medicaid spending and try to recapture some of that as well.
It's progress. I mean, there'll be many complaints. And certainly, some of the programs that the USAID support, HIV medicine and whatnot in Africa, along with the Gates Foundation, some of that is probably money well spent. But so there'll be some programs that are injured that don't deserve to be caught up. But I don't think without Trump being elected and inaugurated and having this Doge program, I think anyone familiar with past efforts to reduce spending would say taking $500 billion out of fiscal 25 spending is just not going to happen. I don't think you can conclude that now.
Right.
Yeah. We're well along. I thought we next turn to page 1. We now have reported earnings for Apple, for Alphabet, for Microsoft, for Tesla. Just any commentary, Jason, as you see these results come in?
Apple saw 5% fewer iPhone sales this holiday season than last year. And going into the holiday season, we were expecting an iPhone super cycle. Everyone would want to upgrade, get the Apple Intelligence AI tools. That clearly didn't happen. And a lot of the reason was China's sales, and China's economy is pretty slow right now. They're facing, I want to say, over a year now of deflationary economy. So Apple's actually lost a percentage in market share globally. So we joked about people switching to Android, but it might be occurring.
How will they do with their, guess it'll be 17. Do you think they'll have enough AI features so that they get into a lot more iPhone sales for replacement, or where do you think they stand on their next iPhone?
Yeah, I feel like they have to figure it out. There's no way they don't. And if they don't do it internally, they've already had a partnership with OpenAI. So certain queries that you ask to Siri will actually go hit the OpenAI API to produce the answer back to your phone and read it to you. So I think if they can't figure it out internally, they'll go out and buy a tool and integrate it. And they have probably 6 months. They have until the fall, right, to figure this out before they start testing it and putting it into the software and for the holiday sales for their, I think usually October is when the new phone model comes out.
And you'll hold off switching to an Android phone till the fall?
My phone needs replaced. I don't know what I'm going to do. I'm trying to hold off, but we'll see.
What about the Tesla results, Jason?
The
first time.
Yeah, they weren't great, but the stock rallied, and I think people clung to the fact that Elon's talking a lot about, we're much closer to robo-taxis being rolled out. They're going to start in Austin, I think within the next couple months. So I think everyone's looking ahead, even though auto sales are weaker. I want to say even their energy business was a little weaker. They didn't deploy as many, the growth rate slowed and how many battery grid storage solutions they sold. So it wasn't a great quarter, but I think there's a lot of Elon optimism there.
Can you explain for us all how the latest version of FSD, which I think stands for full self-driving,
Right.
how the Model Y or whatever you're driving is going to see the young child on a city street running between two parked cars and stop the car? How does all the machine learning, whatever's going on, the data coming into Memphis and then back out to the people who have FSD in their cars, how does that work deployed over a youngster?
The cars are capturing video and all of the driver inputs into the car. And the recordings of all that data from humans driving the cars gets sent to the Memphis data center. And that's all a collection of training data. So you'll have many, many instances of drivers avoiding people, pedestrians, children, how they behave in crosswalks, what actions are taken by the driver when that child does run out between cars. And in the data center there, that huge data center is going to be processing all of these inputs. So video sensors, the camera picks up, it sees a child. What's the driver do? And it learns. So the new thing about this system is it's learning from what people do in that exact situation, rather than having a rules-based system, which is in most of these driver assist systems in cars today. So instead of a rules-based, it's saying when someone's in the crosswalk, you stop and wait. When a child runs out, you slam on the brakes. Then the learnings, the distillation of all of that is the full self-driving model. So it's an AI model. It's the same kind of concept where we talk about weights in a language model, and it's this, I don't know how to describe it easily, but it's how the software fires through the process when it sees this set of actions in a video. How does that get interpreted into the driver inputs? So it's learned all the driver behaviors, and then when it sees that kind of thing happen in its camera, when full self-driving is engaged, it'll take the same actions that it's learned from people. So in this manner, these systems are a lot better at adapting to real world conditions. So they've seen all kinds of different configurations of cars and people running out, and it'll make a decision when it's presented with a new situation. Whereas the rules-based systems that we had before, even before this year, those systems, if they encounter a new situation, they don't know what to do. And that's why full self-driving, even in Teslas a year ago, would pull over. If they got confused, it would alert the driver. It would say, we're going to stop the car. You need to take control. You don't take control, it's going to pull over to the side of the road and stop. So I'm not saying that won't happen in these, I don't know what they've programmed in, but the car should be able to adapt to all the different situations. And ideally it happens faster than a person could see this. So the amount of time it registers that you see a child run out, your reaction time, and then before you move your foot over to the brake pedal and push on it, the car should be able to do that a lot faster than you. So when you're driving, none of this data is being sent back to Memphis and back out to the car. None of that instruction is being sent over the network. So this car will operate without connectivity, but all of the learnings, all of the scenarios and situations that the car sees at some point in time, probably when you're parked, that gets sent to Memphis, and the system will learn from what happened, and how it can do it better.
It's a great explanation, best I've heard. I think Tesla is going to provide, through its own balance sheet or an alliance with insurance companies, so that you will not pay higher premiums for a car with FSD than you would for a car without. And this is to demonstrate that they think that a driver using FSD quite a lot of the time will have much lower accident experience than an average driver without FSD. If I overstated that case, Jason?
That's the hope. They hope it's a lot safer, and they expect these systems to become a lot safer.
Yeah, I think they're going to prove it by either with an ally or on their own, running insurance based on the expectation that it will be safer. What about state by state regulation, where Waymo has successfully listed autonomous driving in San Francisco and Phoenix and Boston and maybe Atlanta? Do the Tesla adherents foresee that they'll have to get this cleared state by state rather than some kind of national program?
I think that was the plan. I suspect with Elon's new connections, he's hoping that happens at the federal level. And it'd really be a good thing if it did for all the players. But yeah, I believe Waymo operates in Phoenix and San Francisco today. Austin, I want to say they're going to start deploying cars this month. Atlanta follows shortly after. And we've heard rumors that LA and San Diego are in the works as well.
And while we're on the subject, the Waymo system has been in operation, for a couple of years, but it's quite a lot more expensive from a competitive point of view than the Tesla system because of its technology. Just sketch out the difference, Jason, so we're thinking about what Waymo might be worth to Google or whether Tesla's worth its very high valuation. I think part of it is this expectation that the Tesla system will be less expensive, or put another way, the cash flow margin, the profit margin, the Tesla will be better than the margin to Waymo and Google.
Exactly. So the Teslas, the engineers there believe that since people drive with just 2 cameras on the front of their face and then 2 microphones on the sides, the car can do the same. Now they have more cameras and microphones than a person, but that's essentially it. So there's cameras and a brain. Waymo, on the other hand, uses a bunch of different sensors. LiDAR, I want to say LiDAR is the most expensive sensor. So when you see a Waymo, it has a lot of bulges on the car. There's a big system on the top. There's bumps sticking out of the bumpers and the mirrors, and there's just a lot of sensors. So the sensor suite on one of the Waymo cars, I believe, costs 3 times as much as you can purchase a Model 3 for. So we're talking, almost, it's not quite an order of magnitude more expensive to build a Waymo, but it's I think you're comparing 30. Well, it might actually be with Tesla's at cost. So the Waymo's projected at like $200K to build.
Yeah.
And that really does need to come down. Uber had they discussed this on their earnings call earlier today, and they're really partnering with Waymo to roll out in those new cities. So in Austin and Atlanta.
Yeah, that's a question we've discussed in prior Wednesdays. Will Tesla do its own system, or will it make some kind of an alliance with Uber, Lyft, or for that matter, the delivery business, DoorDash? You'd have to, they might try to do it themselves, don't you think, Jason? Or what's your view?
I do think that, and it's so Uber's management said that they're open to any of the autonomous vehicle makers joining the platform, but as of now, Waymo's the only one, and they're discussing, just because they need to build the scale, they're discussing purchasing Waymo vehicles that they'll run in a fleet for themselves, just until they can get that scale, and then some other fleet operator, which in this case is probably Waymo or Google themselves, will begin operating them.
Can't do chips and software and FSD for the full 30 minutes and not switch over to healthcare. Any news across the board in healthcare, Jason, in the last several days?
Well, so the pain medicine from Vertex did get approved last Thursday or Friday morning, Thursday evening. They've branded it Jernavix. So then right now the indications for acute pain kind of broadly, Vertex is going after the sales channel through hospitals. So this drug will likely be prescribed post-op. They've announced pricing on it, $15 a pill, and I want to say 400 something at a weekly rate. So looking at some numbers, the average person's prescribed an opioid for 19 days post-operation. And then there's about 80 million prescriptions for treating acute pain in the US each year. Half of those, so 40 million, are prescribed an opioid. Then just some napkin math of how this value makes sense around the pricing. The CDC estimates that the economic impact of the opioid crisis in the US is about $1 trillion a year, which is huge. If the No Pain Act subsidizes a non-opioid pain treatment, and there's a couple out there that it already subsidizes, but this could be the biggest one. The government could, through the No Pain Act, pay for every one of those 40 million prescriptions to be Jernavix, and it would cost them about $22 billion. So I'm not saying that will happen at all, but that you could easily see how that $22 billion investment has a great return if it has just even a little bit of impact on that $1 trillion of economic lost productivity and additional healthcare and addiction costs that we bear every year. But I think it's huge that this drug has been approved. There's a lot of pushback, and people believe that it wouldn't get approved because it wasn't more effective than the opioids. I think that was the wrong way to look at it. It's a lot safer than an opioid. And then this is just the first version of the drug. So Vertex has 2 additional versions in the works already. It's kind of their playbook to out-innovate their competition. They're not going to wait until the patent's near expiration and then push through a new one. They're already pushing version 2 and version 3 through clinical trials right now.
Jason, just to give us some context, we have 5 minutes left. Can you give us a quick rundown on where most of Vertex's cash flow comes from and how it was developed? Just see if they use the same pattern with the pain medicine and what it might look like 2 or 3 years from now, given what they've done with their CF medicine.
Yeah, so they've had, I want to say they're on the 7th, I might be wrong, but the 7th version of a treatment for cystic fibrosis. They got the drug through an acquisition, brought the first one to market, and like I was saying, instead of waiting until sales they started to come upon their patent cliff on that, and then push out the new version to kind of maximize the runway of each drug. Rather than doing that, they kept innovating as fast as they could on each version. So the end result of that, which occurred this past year, was that the only other competitor in that space dropped out. They couldn't keep up. There's kind of analogies with the semiconductor industry in this, is you just try to release a product at a rate that no competitor can keep up with. And they did that. And every time a new version of the drug goes through trials, it has to be more effective than the previous one. The FDA won't approve it if it's not. You just can't sell an inferior product. So the bar gets raised on how good your drug in development, if you're going to compete with Vertex, has to be. So, they really pushed it. I want to say every other year, it's a new version of that was getting submitted to the FDA, and it's generating tremendous cash flow for them, and they're not spending a huge amount on R&D. And in fact, they hit our metric where they spend half the free cash flow, and they're also doing a lot of other activities. So they intend to do the same thing with this pain treatment. They are doing the same thing with their type 1 diabetes treatment, even though there's nothing in market there. They've already have 2 other versions of that one in the works as well. So it's all just anticipation of, if the first one does work, or even if it doesn't, there's another one that will be better right behind it.
And you remember when granddaughter Gwen and friend Holly did the work on companies, the memos are up on the website. The story of Vertex is not only did the Vertex stockholders make a lot of money, but the way in which it was done was really outstanding. This is back on page 15. It's the last column on page 15. And these are somewhat out-of-date numbers, but it was valued, probably up now, but it was the total market value of Vertex based on the cystic fibrosis medicine was around $100 billion. And that was on about 11 billion of sales. And as Jason just outlined, they're very good at being disciplined about their R&D there. So it was on 4 billion of cash flow after all R&D and running a balance sheet with no debt and some cash. So in terms of thinking about Vertex, if you own it or you have a research position or thinking about owning, a really well-positioned pharmaceutical company, you're paying about 25 times free cash flow. That seems reasonable to me if they can maintain that discipline. And if the pain medicine is applicable, to a heck of a lot more people than the percentage of our population that has cystic fibrosis. And just in terms of doing good and making money, I'm going to quote a number here that Jason can confirm, but I think the lifespan before the Vertex medicine for cystic fibrosis for someone with that malady was about mid-30s, 35 years or something. And with the medicine, people live to live a kind of an average lifespan. Have I overstated that, Jason? Or
no, that's exactly right. And when you talk about extending the lifespan by more than doubling it, the patients on the drug, it's obviously doing very well for them, but those patients are living longer and they're going to continue taking the drug the rest of their lives. And new people are unfortunately being born with the condition as well. So the patient population is rising every year just from the fact that, this drug is able to keep them alive, keep them healthy.
Good.
Okay, let's take a quick break for a message from Oak Cliff Sailing.
This week at Oak Cliff, we've been working on finishing up the 4 mash boats that we have in the shop, buffing them, waxing, compounding, finishing painting the bottoms, and doing some gel coat repairs. We've painted Tomahawk, and we have our volunteer Bill working in the sail loft with our high-performance high schooler Ewan fixing a Par 40 spinnaker. And hopefully we can get all these mash boats out the door at the end of this week and switch them so that we have fresh mash boats for the buffing party.
And now back to the show.
Well, we've made it through 30 minutes without Mike. So Jason and I will probably brag a little bit in the interval between now and next Wednesday. But in the meantime, all 3 of us will be back next Wednesday. And in the meantime, everyone be well and stay healthy. Take care.
The views expressed on this podcast are the host alone and do not constitute an offer to sell or a recommendation to purchase or a solicitation of an offer to buy any security nor a recommendation for any investment product or service. While certain information contained herein has been obtained from sources believed to be reliable, neither the hosts nor any of their employers or their affiliates have independently verified this information, and its accuracy and completeness cannot be guaranteed. Accordingly, no representation or warranty, expressed or implied, is made as to, and no reliance should be placed on, the fairness, accuracy, timeliness, or completeness of this information. The hosts and all employers and their affiliated persons assume no liability for this information and no obligation to update the information or analysis contained herein in the future and may or may not hold positions in the securities mentioned.